Hello, welcome back to our channel, Bytes by ETI. So this is a new video that we gonna talk about Claude Cowork that shocks the world around 300 billion IT empire, almost 2 lakh crore gone. So it's like an investor alert video. So we gonna see that how to look into this and what's gonna be the hit that we had. So like India's IT giants like crashed 2 lakh crore vanished in one day. So TCS hits almost 2999 if you see. Then Nifty drops minus 10.5% around, and Infosys single day drop around 8.8%, and overall Indian IT sector it's around 300 billion at a stake. So Nifty's IT world since 2020. Why? Because one tool, Anthropic uh, Claude. That's wanna be. Is it the end of a TCS Infosys empire or a massive buying opportunity? Stick around. I will break down the deck, threats, and your action plan as an investor and an engineer. So hit like if you are in a IT stocks. Let's jump into this. So what's basically the Cloud Cowork? So we gonna see the monster that's basically coming, folks. This is not a chat GPT. It's like a Claude Cowork. It's a desktop base AI agent. So when you install on your laptop, give file access, and it works like autonomously. It's no babysitting from Anthropic. So X Open AI wizards basically. Uh, these are the people backed by Amazon and Google, and valued around at 61.5 billion. So makes Cloud among the most capable AI models for professional work. Most capable, that's the important thing. So it directly competes with OpenAI GPT, Google's Gemini, and it's positioned as like a premium AI enterprise workflows. So the what it does is basically uh, it's basically around like legal reviews 50 contracts around flag risk. So if we see, it's like a desktop based AI agent, not a chatbot but an autonomous worker. When you install a laptop, grant access to specific files and folders, it will execute multi-step tasks without human intervention. So it's available to Cloud Pro subscription around $100 per month. And there are like a plugins 11 open source which released on the 30 Jan. So that reviews around legal, reviews 50 contracts, flag risk, finance does reconciliation, journal entries, sells forecast pipelines from emails, data pulls from CRM and Excel, auto reporting, so marketing draft campaigns, even multi-agent teams with Cloud Opus 4.6 is like coordinating. So Windows now it's like 70% desktop hits. So let's stay tuned, like we will see that what's basically what it does actually. So these basically the things that we just spoke about, like a document automation, data and reporting, legal workflows, multi-agent teams under Claude 4.6, sales and marketing, drift drafting, finance and accounting, reconciliation and journal entries. That's the major thing that we just spoke. uh, so the bloodbath around 2 lakh crore wipeout numbers don't lie actually. So worst day since like Nifty IT around like March 2020. So around a COVID backslash. So it's like a Feb 4 that SaaS. Uh, it's a complete backlash in the SaaS industry. Nifty IT around minus 10.5. India's 300 IT billion sector bleeds around 2 lakh crore in one session. So if we see, check this table out. So hits 52-week low TCS again. It's lost the rank 4. That's the major aspect. Infosys again, ADR also fell 5.56 overnight, worst in years. So is it like a multi-month intraday low for HCL Tech? Wipro again, ADR wise fail. Tech Mahindra, broader sector panic but not specific. Mid cap also like hit harder than large caps like L&T, Persistent, and like Infosys, all those. So like as per the Thomson global also big aspects. Uh, it's like typically Thomson Reuters 15.8, LegalZoom 19.8, around 285 billion software meltdown. It's like a deep seek moment right now, deja vu moment, like where Nvidia lost 600 billion and then recovered. So is it this panic or like a just prophecy? So this is like a real disruption people are like thinking, but let's see that how thing goes and how that basically why India was like hit hardest. So the man day killer, that's what it's typically the man day model. Okay, so whenever there are like US or EU clients, it will typically outsource to India. It's a bill per day type of timesheet these guys of people billing. So we gonna see like how the AI gonna disrupt this model. Okay, so typically like in India's we will deploy like 500 to 1000 engineers to US banks for contracts, data entry, reporting, bill per day. If it is a co-work, so whether one agent does it all, review docs, reconcile those finances, generate those reports and plugins, targetly exactly what we outsource. So here that's the major thing that we gonna see. Uh, that's what I was talking about. The global software stocks also reacts. Thomson, LegalZoom, Salesforce 26 to 28%. All these CRM, all these legal entry, data agent, all these are under threats. So around 285 billion, 2 lakh crore, minus 21 S&P software index got failed. Again, it seems like a deep seek moment, but what we were talking about, Claude Work, 285 billion software sales off. So here, what we could see from the bear case, Palantir says that SAP migration now weeks, not years. That's typically Palantir's mainly the take is all about. Microsoft and Anthropic tie up for partnership that accelerates Fortune 500 adoption, and SMEs at $100 per month price point makes this accessible to SMEs, not just larger enterprises. Okay, brutal for actually IPO. So NASCOM admits that pressure on legacy. They are looking like a pressure, but bull side, if we see what sort of enterprises need governance and security, all those stuff, AI can't yet. So that's the major aspect. TCS training, that's they are gonna see that 15,000 crore annualized AI revenue, around 2.5 lakh employees trained on AI, and around these are the few things. But whether is it gonna be sustainable, non-sustainable, that's basically we see. Also post DeepSeek, Nvidia stocks got recovered, so it's just a sentiment based driven sell off, often overshoot. So we gonna see like how is it the sell off justified, or is it like a uh, balanced view that we gonna see both cases. How to think about like IITA Indian IT stocks, these are the buckets. So one, we could see deep lock-in, so where deep enterprise lock-ins are there. So low disruption risk like TCS, Infosys, HCL Tech, where multi-year transformation contracts are there. So for these people, switching cost is like enormous. Managing complex interconnected systems across 50 plus tools, it's really tough for them. So accountability and governance, that AI agent that can't replicate it. So that's again, we're gonna make one video on the responsible AI, where how the security and responsibility and accountability matters, and they are positioned to benefit as an AI implementation service also as demand rise. So I think on those front, we gonna see deep enterprise lock-in. Like it's kind of a buy and hold, as per they will pivot to AI implementers. That's what we gonna see from here. Then AI adjacent mid caps. It's like a moderate slash opportunity for Persistent, Coforge, and L&D. So these gonna be see like as a watch and then add like a LO, what we can see. So high value AI integration wins coming Q4 FY26. So Persistent embedded in AI projects. Uh, that's one news. then these are the things that we're gonna see. And the BPO and task based outsourcing, that is on the red flag, that's basically highest disruption list. Whenever you see high volume BPO, those companies based out of, let's say, WNS or Genpact, single function players, where there is a repetitive document work, exactly what Coworks automates, then finance, legal, data entry, compliance, all reporting at risk. Man-day model, most exposed, one agent replaces 10 staff. That's a huge. And pricing pressure likely before volume pressure, watch margins. That's the thing that we're gonna see. So actions, basically earnings Q4 FY26, these are the key. We're gonna see that watch deal sizes, revenue or employee, AI share. We have to bet on enablers, data centers, cloud, rather than like a SaaS currently. So the bottom line for this, don't panic sell on this sentiment. We have to watch the earnings calls closely, from like a real test from like Q4 FY26 to Q1 FY27, and listen for the deal win sizes, AI driven revenue share, all those things. We're gonna see that we have to differentiate within the sector. Not all the stocks are equal. Companies with AI capabilities like L&T and Persistent and deep enterprise lock-in like a TCS, Infosys are better positioned than like a pure BPO or like task automation business. So selective exposure beats blanket IT index fund in this environment. So think about the enables. That's the major aspect that we're gonna see here. So uh, so key takeaways are: real event, 2 lakh crore gone, structural pressure on man days, but sentiment still overshoots. So there is like a adapters thrive where headcount to intelligence, that's the journey that we could see. But yeah, verdict may we can see in the next earnings. So do you still hold it? Is it like a holding, buying, dip, or exiting? So just comment below, smash like if this saved your portfolio. Subscribe for like weekly stock AI deep dives, share with your friends. They need this disclaimer: this is just educational only, consult your advisor and due diligence. So thanks for watching, see you next time guys. Thank you so much, and I will keep this link in the description for your moment. So thank you so much.